All right. Good afternoon, everybody. Making sure everybody's tuned in. Please chat in. Let us know that you hear us all right. There's either the webinar chat or the question and answer chat, or if you guys are joining us over in YouTube, there's just, the YouTube chat. All right. Excellent. Looks good. Sounds good. Fantastic. Feel free to chat in where you guys might be joining us from today. I always appreciate that, where everybody is joining us from today. So welcome. Welcome everyone. Make sure that we're good to go here before I officially get started. Fantastic. A couple people up north there. Orlando. Excellent. All right, with that, so welcome everybody. Oh, everybody's scattered all over the place. Cool. I like it. You see me looking around a little bit throughout here. I've got a ton of different monitors, just making sure everybody's good to go though before I do officially get started. And I am right now turning up, walking out of the field of view over here. I was turning up the air conditioning. It's hot here. It's been really hot here. So I am broadcasting live from St. Croix. I'm in the U.S. Virgin Islands. And hopefully the, things like the power hold out here. Cool. Somebody's actually joining us from Africa. I'm kind of curious as to where. So it's always interesting. Whenever I ask that question, it's just for my own curiosity where everybody's joining us from, because we literally get people from all over the world. I mean, every time zone you can ever imagine kind of joins us. A couple of people in here. Cool. From Rwanda. A couple of people in here from like Singapore, again, Rwanda, Germany. So somebody just popped in here from there. So it's all right. Dublin, Ireland. Okay. Wow, cool. We've got a very diverse crew in here today. Fantastic. So again, welcome everybody. My name is Don Kaufman. I'll be taking you through a little bit about Ultima throughout the course of today's session. If you've actually sat in on one of these TheoTrade presentations before, look, every time that we come in here, we do a presentation, they're vastly different. So, I do actually execute a few live trades possibly throughout the course of this as well. So by all means, sit tight, relax, and we'll try to answer some of the questions along the way as well. If you guys do have questions, you can always fire them into the chat. By the way, that's something that always comes up. People say, can I ask questions? Of course you can. So I am reading in real time. The other thing that always comes up is people ask me, is this live? Of course it's live. In fact, as I was saying a moment ago, you'll see me maybe execute a few trades. Just depends on what's going on in the marketplace. Today actually might be one of the days that's, we're good to go for firing off a trade or two. Anyway, with that, let's get started here today. So again, you'll see me use also a multitude of different trading applications. This is TastyTrade. TastyTrade is kind of like the up-and-comer in terms of brokerage platforms. This is thinkorswim. Thinkorswim is very well established. I'll describe a little bit about both throughout the course of this presentation. So, all right, Ultima alert. So this is a high probability income generator. Again, my name is Don Kaufman, and you are watching a TheoTrade presentation. This is your first time here. It's a risk disclosure. We're not financial advisors nor a broker dealer. And the reason that I always put that up there is because I did spend about 15 years inside of the brokerage world. So I think that makes it, it's kind of cool. It's kind of compelling because there's nothing that you're going to ask me that, I haven't really seen before. There's, a lot of stuff will come up today throughout the course of today's presentation. Should be able to answer pretty much any question that that does arise. Anything about margin, brokerage firms, by all means, you can hit me with those. All right, a few housekeeping items. Listen, what I'm going to cover today gets quite in depth, and I don't mind saying this to you, but you're going to have to pay attention. I mean, look, shut the door, turn off Skype chat, maybe whatever else is distracting you. So I spend a tremendous amount of time during today's presentation walking you through some, very detailed, not just examples, but live trades. So phones on silent mode, close Facebook. In fact, just delete Facebook altogether. I'm doing you a favor over here. Look, as I say, this is a skill set, and you took the time to be here. Just focus on being here. So the other aspect that always comes up throughout the course of this presentation, you will see me sometimes refer to an indicator called the expected move, right? Expected move has literally changed the way that we view markets, and we will provide you a copy of the auto expected move indicator It is free of charge. It is a $500 value. Okay. Stay with me right until the end of today's webcast, and I will provide you a link to go grab a copy of the expected move indicator. By the way, if you have no clue what an expected move indicator, happens to be, I'm actually going to show you. If we take a quick glance, this is the SPX, the mother of all products. What the expected move is these little hash marks in here. Okay, effectively what it is. Okay, it's how the option marketplace, okay, looks at forward risk. So there's a million different indicators that are on the market out there. There's a MACD, there's Fibonacci, there's a Bollinger Band. Okay, what we're using here for range of a product, there's a million different things you can use this for, but it says we're supposed to move like this week up approximately $55 or down $55. And it's the option marketplace that actually sets the expected move. Okay, and it can give you an incredible array of feels for the marketplace. Like if you come in here to Netflix and I pull up auto expected move, right? You can see Netflix just ripping through expected moves in consecutive weeks, which is absolutely unheard of. It tells you, how wild the marketplace has actually become. As I said, there's legitimately 50 to 70 different applications for the expected move indicator. And we'll be using it throughout the course of today's presentation. Again, stay with me right into the end of the webcast, and we will provide you a copy of that expected move indicator. Again, it's literally changed the way we view markets. This is a quick screenshot of that. Look, this is why you are here today. So we're going to discuss Ultima. Okay, Ultima is not ultimate. Like, it has nothing to do with ultimate. When I say the term Ultima, it is the volatility of the volatility of the volatility. Okay, and you're like, well, what does that mean? I'm going to show you precisely that. So we're going to discover what Ultima trades are, why they're so ideal for the current market environment to generate monthly, okay, returns. One of the things that I want to express to you, this is about, okay, trying to generate monthly income. This is not going to be an investment strategy. This is not going to be like a buy and hold of any kind, shape, or form. Okay. This is also not going to be a big technical analysis discussion. You are not going to see any charts here other than me saying, like, look, we went up, now we go down, but neither here nor there. Look, this is about generating monthly income. And I'm going to ask you guys a question. I think it's a really fair question to ask, and I'm going to hit you right up front. Okay. If you can return, right, monthly returns, just monthly returns, regardless of market direction, okay, does that interest you? Because what we are doing today is very much non-directional. And I'll explain that as we kind of continue along. Okay, so you're going to discover a little bit about Ultima trades, why they're so ideal for the current market. We're going to learn a little bit about skew, which I'll talk about and use on a daily basis. You're going to learn how and where to find edge as a retail trader. And look, one critical thing, when I say the word edge, what does that mean to you? Okay, I want you to really think about that. Like, what does it mean when I say, oh yeah, man, we're going to find some edge in this marketplace? Okay, it's something that you can mathematically display and say, look, if I did this trade 1,000 times, it would have, okay, some definitive mathematical positive outcome. That's the most critical thing. I don't really care, like, oh, it worked once. Oh, I found the 3 green arrows and it made me bullish and I made some money. Look, we're actually going to show definitive edge here, and that's actually what I'm going to start with. We're also going to learn to reap the benefits of high probability trades and learn how to mitigate, okay, any large losses. I mean, mitigating the large losses. It's how not to take large losses. And you're going to find out what products, okay, are viable and what products are a recipe for disaster. I think you'll be surprised. You're not going to see me throw stuff up here like NVIDIA very often. All right, so here's a little bit about me. I'll give you guys the kind of the nickel tour regarding, who I am and why am I discussing, why am I discussing Ultima? So some of you maybe came across me in the past, some of you have not. So I start with, I watched order flow for 15 years, and that has actually afforded me a very unique skill set, a skill set that I am unequivocally going to share with you today. So I came into this business very differently than most people did. I grew up around traders. I have family that traded on the SIBO. Actually, an uncle that started as a market maker in the 70s, and he started a trading firm in the 1970s called O'Connor and Associates. And he had one seat in 1976. By 1982, he had over 500 seats on exchanges around the world. It's one of the fastest growth stories, okay, and one of the largest trading firms literally in history of markets. They eventually sold O'Connor and Associates to the Swiss bank. It was still called the Swiss bank. There's a division that's still O'Connor at UBS, but it's just how I got involved in it, and I kind of grew up around it. And in the late 90s, I started trading. So late 90s, I went to Chicago, started trading. Shortly thereafter, I was invited into a startup brokerage firm. Nobody ever heard of it before. It was a real strange name. It was called thinkorswim. And I was very early on thinkorswim, and I rose to the executive team. You know, within I don't know 6 months of my being there, I rose to an executive position at thinkorswim. I was there when we took thinkorswim public in 2007. I was there when TD Ameritrade bought us in 2009. It's almost a $700 million deal. 700 million back then is 700 billion today. Inflation, but it was about a $700 million deal. Thereafter, I signed. It was in 2010 when they fully acquired us. I signed a 5-year lockup clause with TD Ameritrade. So I built the education division of thinkorswim, and then I went on to run education for TD Ameritrade and their 7 million clients for a period of approximately 5 years during my lockup clause. In 2015, I exited TD Ameritrade, and just about a year later, we built TheoTrade. And it's a little background on me and what you're going to learn today, and what you're going to learn expressly here at TheoTrade is, it's not from just, my experience. Look, what you learn here, okay? It's not some market maker. I was a kid when I was a market maker. I was 22 to 24 years old. Everything we teach here comes from the knowledge of having studied order flow while both at thinkorswim and TD Ameritrade. We had access, okay, to everything that you did, every trade you've ever done. And we studied, okay, everything that people did. And when I say studied, like, we would literally look at subsections of hundreds of thousands of accounts and say, does this make money? Does this person do an iron condor? Does this person sell option premium? Does this person buy option premium? Do they trade futures contracts? Allow me to specifically say, the buck stops here. Anything you've ever thought of in the market, we've studied. Like, I knew every mouse click of this platform, meaning, like, I knew if you clicked on charts, what you were going to do next. Okay. If you clicked on the trade tab, which option chain you were most likely to open. It's amazing how much data. Okay. And again, what you're going to learn here today literally comes from watching billions in other people's mistakes. But more importantly, what works best for you. You, okay, are a retail trader. I don't care if anybody was a market maker. I come from that background too. It's all about retail trades. Anyway, with that, if you ever need to get a hold of me after today, I'm Don Kaufman. Just go support at TheoTrade.com. We use a common inbox, and we do that to get emails answered much faster. Otherwise, if I gave my direct email, I'd have 1,000 emails that would sit there. So we give turnaround on emails almost immediate. But if you ever need to get a hold of me directly, just put Don Kaufman in the subject of the email, and that will go to me directly. So that's a little bit about my background. I still do a lot of TV appearances. This is TD Ameritrade TV. I still do a spot every Wednesday on TD Ameritrade TV. This is CNBC. I try not to do CNBC very often. That's changed a tremendous amount, but this is from a couple of years ago. It's myself, pitted against Kevin O'Leary, or kind of a more memorable, if you will, CNBC experience. This is IBD, so Investors Business Daily. Lots of people are familiar with, because of course it was originally William O'Neill. We took the cover of Investors Business Daily in December. Okay, this is, if you look very carefully, it's December of 2020, because the author of this wrote an article about, hey, who made money in 2022? So this is 2022. It's right at the end of 2022, and it was gold for me. And of course, my I guess infamous quote: "It's actually been the best year I've had since the financial crisis." Like, nobody likes to hear that, but it's the truth. It was like the best year I had since the financial crisis. And of course, that's me sitting in front of the computer monitors. By the way, that's exactly what I'm sitting in front of right now. That's here on the island. And through the little window that you can see in the background, okay, there's ocean out there, man. We're about 100 yards back off the ocean. It's about as close as you want to be to ocean on this island. All right, let's get down to it. That's the as I said, it's the nickel tour about me. If you ever have any questions, by all means. Look, let's get started here and talk about Ultima. Volatility in markets has arrived. It doesn't matter, like when you guys look, you're like, I see the VIX and the VIX is low right now. That's true, but VIX is kind of like ebbs and flows. There's just no question that volatility is here, and it's not going to abate anytime soon. So the first point I make is, look, inflation's still running red hot. I saw like Canadian CPI came out today. Still really high. I mean, when you think of like inflation, you're like, oh, it's coming down. It's at like 5%. And I just like, the old face palm. I'm like, oh yeah, it's coming down. I have 5%. That's like 5% is still really hot. Everything's going to cost you 5% more, okay, every year until, well, the rest of my life. Anyway, Fed's going to continue to push rates higher for at least now. Strong dollar, okay, and geopolitical risks clearly continue to proliferate. So this is kind of game on. It's what I call game on. Look, the markets, they got real in 2022. And there's one reality, and only one reality of markets. Like, I want to bring up the spiders for a second. And again, as I said, I'm not a big chart guy. I'm just not. But I want to show you like a 10-year on here. This is a 10-year chart, okay, of the spiders. And here's the reality. Well, you know what? I'm even going to throw up more time. More time. Let's get crazy. Let's pull up a max chart. Okay. Here we are coming out of the financial crisis right here. This is where interest rates were sitting at zero, and they were basically sitting at zero. And right here in 2018, right in that spot, they raised interest rates for a second. The market freaked out, but then they went right back to zero. And they were definitely zero right here because this was the onset of COVID, and they brought everything to zero and gave trillions and trillions of dollars. First time they ever raised rates, blip, okay? And yet they're still going to raise rates. And yeah, that's a big question mark out here. The only thing I know, a lot of volatility is going to happen, okay? This is what I call a Fed-fueled fantasy, right? It's Fed-fueled fantasy. One thing you're going to have to come to a conclusion is it ain't going to be easy from here. Stock picking, Reddit boards that are, looked at by a couple of millennials sitting at home at their mom's basement. It's just not going to cut it. By the way, hopefully I didn't offend anybody with that one, because I tried. Whenever I think of like a Reddit board, I think of like a kid that's like 18 years old, okay, or 20 years old, or possibly even 30 years old, sitting in the basement of their parents' house, trading. But that stuff's just not going to cut it anymore. That was 2021. You're going to need a strategy that you want to embrace chaos and volatility. You can't rely on directional bias, because here's the one truth. Like right now, tech stocks have been hot. That's probably not going to last though. Like trying to pick market direction right now, this is a dangerous time. Look, if you're on the NVIDIA run from the beginning of the year, you're up like 200%. Like literally, NVIDIA since the beginning of the year is almost 200%. Okay, like where were you on that one, big guy? I'll tell you where you were. You wanted to avoid it because the thing was getting absolutely killed, and it's critically important that you guys get this. It's like, I'm not going to rely on directional bias. Okay, you're thinking it's going to be all tech this year until it's not. And I can tell you right now, there's signs of tech not fading, but there are huge risk signs in technology stocks right now. for those of you that want to geek out, and I'll show you in a moment, there's an inverted implied volatility skew on tech, which is in most cases, it's partially the kiss of death. And we're going to reduce risk while substantiating monthly returns. Look, all I'm saying is, okay, you're going to need to go beyond trying to find what goes up or down. I know that you're bombarded by everything. Everything that you hear, like on TV, is like, what's going up? You know, it's Kramer chucking a chair. It's bullish, it's bearish. But when you start to really get into the trading world, okay, you're going to find out that bullish or bearish, it isn't real. That's what you see on the retail side. And I stress that to you because, you know, even the people that always made money consistently, that were retail traders at thinkorswim or TD Ameritrade, they go beyond what's bullish or bearish. So we're going to talk about Ultima trades and Ultima alerts. Okay. And what Ultima trades and Ultima alerts is, okay, it's trading against higher implied volatility skew, which I'll explain in a moment. It makes option prices higher. Ultima trades are designed to sell options, okay, and reduce risk. Now, time out before we even get going. And I'm not, you know, you can look up skew all you want. Before we even get going, we are going to talk about selling options. And the very first thing that I want, okay, to reiterate to you is everybody asks me, how much money do I have to do this? In the past, selling options, okay, has been very, okay, ineffective. Now, okay, $2,000 in an account, it's more than enough. Throughout the course of today's presentation, I'm going to say this again, margin. Don't worry about it, okay? Do not worry about your margin. I will show you, okay? Really dig deep into it here, that margin is nominal these days. And I'm actually going to show you a $5,000 account that was only opened very recently, okay? And I'll show you kind of how the $5,000 account is going and how nominal margin happens to be. So many people here have heard through the grapevine that selling options, okay, is a great way to make money. Yeah, anybody ever heard that before? Like, seriously, let's just, you know, let's just yay or nay. Y for yes. Type into the chat, Y for yes, N for no. By the way, this is an interactive session. Jump in here at any time. So just the webinar chat, you know, you can hop in here, Y for yes, N for no. Like, people often hear that. They're like, you know, and again, I'm not asking about your personal experience just yet, okay? So I like that. Somebody's like, yeah, but what happens is, and everybody that's come in here, like, yeah, I've heard that before. You know, selling options, a great way to make money. But if you've tried it, this is exactly what happened. Okay, this is exactly what will happen to you. You will make money. You will make money. You will make money. You'll make money. Make money. Make money. Make money. Make money. And then all of a sudden, bam! You get hit by a Mack truck. You're like, ah! People lose like half their account. They have no idea what they're doing. Okay, there's no free lunch in this business. And I love to say that to people. There ain't no free lunch, okay? If you've experimented with selling options, you're going to know that you can make a lot of money, but you often give it back. Well, today we're going to explain, okay, how to do this in a very proper manner. We're going to use Ultima, which is extremely, okay, risk averse, okay? Risk averse. By the way, averse, it's hate. We hate risk. We're going to mitigate a tremendous amount of the risk. But more importantly, we're going to show you where edge really lies. And what edge is like mathematically, if I were to do this is actually the first thing I'm going to explain here. So today's session, going to separate myth from real risk, fact from fiction, and selling options premium. Again, don't worry about margin. Look, if you know nothing about options, that's okay for today's session. Okay. I love saying that, by the way. You know, say it with me. No free lunch. There ain't no free lunch in here. Okay. Today you have to learn something. But you ask like what Ultima is. Well, I'm going to show you Ultima trades, but here at TheoTrade, okay, we now have Ultima alerts. Ultima alerts, okay. When I trade, you can basically see everything that I do. And it's an alert, okay. Comes out to you as, for instance, a text message. Right? So text message, push notification, and you can see everything that we do in real time. So let's dive right in. Again, if you are brand new to this, okay, just deep breaths. We're just grasp big concepts. All right. For starters, we're just going to talk about probability and risk. That's what you want to grasp. Now, for those of you that are experienced, if you're experienced, okay, strap in because I'm going to throw some curveballs at you today. So I try to gear this towards, a couple of different levels. So we're going to start with novice and work our way into the extreme. If you're a little bit more of a trader, you want to grab, okay, what we term criteria. What criteria is, it's the nuts and bolts behind the trade. It's literally like how the trade gels and meshes together. Criteria is what expiration cycle, how far out do I go, what deltas am I using, all of that. Let's dive right into it. Again, I'm going to reiterate, $2,000 is needed in an account to do this, $5,000 in a retirement account. Everything I do, okay, everything I do can be done in a retirement account because I trade this in an IRA, and I will explain that. Now, there's a lot of different facets of selling premium. People call it all kinds of stuff, selling premium, credit spreads, short call spreads, bull call spreads, bear call spreads, bull put spreads, bear put spreads, delta neutral trading, selling naked. Oh my, look, you could be bullish, you could be bearish. Predominantly today, we are going to be what we term market neutral. But I just wanted you to know, like, there's all these geek terms out here, okay? One of the things I want to express to you right now, okay? Some of you have gotten into trading over the years, and you become infatuated with, like, I must learn an iron condor. I must learn a bull call spread, a bear call spread, a mambo combo, a conversion, a reversal. People come up with all kinds of stupid names. Like, I got involved in trading when I was literally a child. I don't remember learning options. I really don't. Okay. I grew up around traders, and I remember like Thanksgiving when I was probably like 8 years old, or like I was in the money on this, one, and yada, yada, yada. Look, in this business, I'm going to tell you right now, don't make it harder than it needs to be. In options, what are there? There are calls and there are puts. And what can you do with calls and puts? What can you do? You can buy them or you can sell them. And that's it. That's it. And people go, why is it got to be so difficult, man? Okay. I don't know. The credit spreads and bull call spreads and bear call spreads and bull put spreads and iron condors and conversions and jelly rolls and boxes. Okay. Oh my. None of that crap matters, because in the end, there's a call, there's a put, you can buy it, you can sell it. So make it easier. I'm going to make it easier. All right. Feeling better now. We're going to continue. Oh, how our members are doing. I grabbed this back in June. I wanted recent feedback, seasoned trading insights and analysis. TheoTrade, okay, a place with a comprehensive set of resources to study exceptional instructors, beginning with Don Kaufman. I have a PhD in quantitative economics. I learned more about markets and the economy from listening to Don, okay, when the Fed spoke, than from my graduate studies. All the instructors offer unique seasoned trading, okay, analysis and insights. And the chat member is exceptional. Okay, you can go as deep as you want or stay in the close to the shore in the shallows, your choice. It takes a while, okay, to make pickles, yada, yada, yada. TheoTrade is worth the cost, time, and effort. All right, my review is based on multiple years of experience with TheoTrade. Okay, here's one more. Been a member of Theo, I think about 5 years. Okay, I had to unlearn a lot of the stuff that I learned. Okay, in general, highly recommend Theo. Okay, my part, grateful to Theo. So I just wanted to throw that out. Let's jump back to trading here. Probability and profitability, critical. Everything you do in trading is based on probability. Doesn't matter whether you realize it or not. It is. Like trading is what it is, right? We can create trades that have a 90%. Somebody actually came in a chat earlier and they're like, do you really have like a 98% track record? Yes, but I'm doing trades that have an incredibly high probability, but I like to start with this. I like to get in people's face and be like, look, being right or wrong, it doesn't make you money. Probability, like it doesn't matter. Like somebody goes, how often are you right? And I go, 98% of the time. And they go, oh, we're not worthy. Yeah, you are, because you can be right 90% of the time. Okay. You can be right 90% of the time. The first thing you should ask is, what happens to the other 10% of the time? You go, don't worry, you're going to find out, right? And you will find out, and it will be horrific. So probability alone does not make you profitable. Markets are always a trade-off. You could be right 90% of the time, you can still lose money. Okay. You can have really, really high probability, but there's still a lot of risk. Like everything's a trade-off. What we're going to do first and foremost is we're going to talk about edge. That's what people are here for. I want to show you where the edge lies. So let's get down to it. I always use, to begin with, the exact same example because it's important that everybody gets on the same page, right? All right. It's always important that people get on the exact same page. So with that, I start with a very basic example. First of all, this is a stock, and I call every fictitious stock, I call it stock. Okay. Why? Because I'm ridiculous. So it's a stock and it's trading at 100. First of all, do I own the stock? No. Do I want to own the stock? No. Do I have to own the stock? No. Why? Because sometimes when you own stock, it goes sour very quickly. Look, I want to generate, okay, the best returns I can with the most small amount of capital that I possibly can. I want a good return on capital. Return on capital, basically, and there's a lot of like return on investment, return on capital, a lot of different ways to express this, but I want the least amount of risk. To me, it's more important is I want the least amount of risk with the best return plausible. And for that, I'm not going to carry stock because carrying like $100 stocks, it's expensive. So instead of actually trading stock, I'm going to trade an option. And in this example, I'm going to go out here, all the way out here. And in my first example, I'm just going to slop through this and give you a buy, okay, a 120 call. And I'm going to pay exactly $1 for it. So there's a lot of people with no experience. If you have experience, hang in there. If you have no experience, this is for you. Call option. What does a call option do? Well, it gives you the right to buy. Right to buy what? Stock. At what price? The strike price. What's the strike price? In this case, 120. So I have the right to buy the stock at 120? Yes. Do I want to buy the stock at 120? Well, I have the right to buy the stock at 120, but I don't really want to buy the stock at 120. So then why do I buy a call? Because I have the right to buy the stock at 120. And if the stock actually jumps to 150, I have the right to buy the stock at 120. Everybody else has to pay 150. That's going to be worth at least 30 bucks. Okay. It's going to be worth at least 30 bucks. And you're like, what? So what's a 120 call? Okay. What's a 120 call? Gives you the right to buy the stock at 120. Now, well, the stock right now, though, is not trading for 120. Where's the stock trading? It's trading at 100. How long do I have? How long is this 120 call good for? The answer is 3 months. 3 months. In 3 months, can the stock get up to 120? Yes, maybe, but it's probably not a good chance. Like what could happen here? Stock could stay flat. If the stock stays flat, I lose $1. If the stock goes down, I lose $1. Even if the stock goes up, let's get crazy, it goes to 110, I still lose $1. Even if the stock gets to 120, I'm like, oh, it's going to happen. Yeah, I still lose $1. How do you make money over here? Stock has to jump from 100 and go soaring all the way, for instance, to 130. And if it soars to 130, you have a 120 call. What does a 120 call give you the right to do? It gives you the right to buy the stock at 120. Do you really want to buy the stock at 120? No. But instead of buying the stock at 120 and selling it at 130, which you could do, you could just sell the 120 call for at least 10 bucks. It's going to be worth at least 10 bucks minus the $1 you paid for it. So you're going to be up about 9 bucks. Does that example make sense? Because I just flew through that. As I said, I'm going to slop through that one because we're not here to teach buying options. We're actually going to talk about edge and selling them. Go, why are you going to do that? Well, I'm going to show you. First of all, this example is going to be good for 3 months. Why do I do 3 months? Because it's really going to aggravate some of you. That's really my goal. No, I'm actually going to show you why 3 months is so incredibly important. Okay, and it's really important that you pick up on the 3 month portion of this. I'm going to go out in this example. I'm not going to buy a 120 call. I'm going to sell a 120 call, and I'm going to collect what we term a $1 credit. I'm going to put it here. I'm going to sell a 120 call, and I'm going to collect a $1 credit. Okay. Now, time out. I just sold a 120 call for $1 credit. First question that often comes up, okay, and it's actually a fair question. First question that comes up is people go, whoa, time out. How did you sell something you never owned? Well, I'm selling myself into an obligation. In options, okay, you can always be on two sides of the trade, right? In options, you can either be a buyer or a seller. And that's why I brought that up. And you can actually open a transaction by being a buyer, or you can open a transaction by being a seller. And some people are immediately going to say, excuse me, my brokerage firm won't let me do that. Don't worry about that. I'll take care of it. Okay. Your brokerage firm will let you do this. You just have to have the proper introduction. What's the introduction? That's me saying like, hey, naughty monkey, you let them do this. That's what we call an introduction here at TheoTrade. Like we have clearance to be able to do pretty much whatever we want in terms of option trading at most broker dealers, not all of them, okay, at most major broker dealers. And we have relationships with E-Trade, and we have relationships with Charles Schwab, which is TD Ameritrade. We have relationships, of course, with Tasty Trade, okay, with another firm, Tradier. We have relationships with all the brokerage firms out there. Why? Because when thinkorswim eventually sold to TD Ameritrade, okay, everybody kind of split up almost, and everybody runs different brokerage firms. I actually had somebody the other day, they're like, it's like the PayPal mafia of like brokerage firms. Anyway, if you look at this, I'm selling a 120 call, and I'm selling a 120 call. By selling a 120 call, I have obligated myself, right, to give somebody stock at 120. Do I own the stock? And the answer is no, I don't. But I'm obligated to give it somebody at 120 and go, I don't know if I like this. Don't worry about the risk yet. We're going to cover risk. First, I need you to understand why I'm doing this. And it'll come clear in a few moments, right? So I'm selling a 120 call because there's an incredibly high probability, okay, of keeping the dollar. But how long do you have to wait to make the dollar? 3 months. And you go, oh, yuck. Okay, I'm disgusted by this trade. I don't want to wait 3 months. I agree with you. I resemble that remark. So we're not going to wait 3 months, but I'll get to that in a moment. We're going to sell a 120 call. We're going to collect $1 credit. Then what happens? I go, I do nothing. Okay. And then money comes in and you go, how does that happen? Well, what can happen to the stock? Stock can stay flat. I get to keep $1. Stock can go down. I get to keep $1. Even if the stock goes up, I get to keep $1. The only place I start taking risk is if the stock gets above 120. But if the stock went from 100 to 130, I'd be like, I'd be puking off the side of my desk over here. Okay. It would be absolutely horrific. But either way, I get to keep $1 credit. Are we okay? Right? So one of the things, again, people are looking at this and they go, the 3 months really bothers me. Again, I'm trying to show you something about the 3 months. One of the keys to the marketplace, okay, is not speed, right? It's not like people like, I like that 0-day expiration thing. I can see myself making money right now. This one, I'm not waiting no 3 months. I didn't ask you to wait 3 months, okay? You just, when you go out and you're going to ride the pony, you got to ride the right pony. Like, do you want to ride the fastest horse out there? You're like, well, that sounds exciting. Yeah, but you're probably going to die trying, right? Okay. So I want to ride like, the little donkey that's going to get me there. And I really don't care how to be profitable. I just want to be profitable. And again, with all due respect, if you're a person that likes to be like, trading with your hair on fire and you're like, I'm up 100, I'm down 100 grand. Okay. Look, this is about consistency. This is about profitability. All I want to do is get you in, get you out, get you on with your life, okay, and show positive P&L every single month. And this is how to do it. So don't worry about the 3 months. I'm going to show you in a moment. Okay, what I need you to understand, this is an incredibly high probability trade. This trade right off the cuff has upwards of like a 95% probability associated with it. How do you know that? Well, first of all, stock going from 100 all the way to 120, that's like a 20% move to the upside. 20% move and you don't even lose money, right? So the key is in here, you collect $1 and you would have to wait a full 3 months to keep the full dollar, but we're not going to do that, all right? Any questions on this one so far? Okay, all I need you to understand right now, can I go out and I sell an option that I don't own? Yes. Do I have to have a lot of margin to do this? No. Okay, we're not going to worry about margin just yet. So don't worry about margin. You're not going to have a lot of capital to do this. You can do this with $2,000 in the account. All you have to be able to understand is that, in effect, you can do what? I can sell something that I do not own. I collect $1 for it. Of course, the inevitable question, why do I sell options so far out in time? You may have noticed in my aforementioned example, sold options a few months out. Typically, traders like to sell short-dated stuff. That's actually why you're tuning into this, right? It's of critical importance. What we do here at TheoTrade, this is where I say kind of the rubber meets the road. It's great when people talk the talk in like a Reddit board, but do they have, for instance, we have over almost 3 years, it's just under now 3 years, okay, of profitable, not examples, of live trading from this. So the rubber meets the road. Criteria is what we do here at TheoTrade. And criteria is defining where we can find edge. A lot of people are very familiar with this decay graph. Okay, options are supposed to decay like this. Yes. Okay, the closer you come to expiration, the faster the option decays. What if everything you learned about time decay didn't matter? What if we learned something called Ultima? What's Ultima? The volatility, the volatility, the volatility. You're like, what does that mean, man? Well, let's go into the real market and show you. So when I say I'm going to go into the real market and show you, that's NVIDIA, but look at this, the S&Ps. We're going back higher. Let's go over to the spiders. Okay, what are the spiders? How many people here are truly familiar with spiders? Anybody? I use the spiders, my marquee example, but with all due respect, I have position, position, position. I always am trading spiders. Why? Okay, because it's like basically the most liquid product out there. If you look at the spiders, they've already done 4.2 million contracts today. That's just the spiders. That's not the whole market. It's just spiders done 4.2 million contracts. Do you have any idea the whole market yesterday, what it traded? Okay, just tell you off the top of my head yesterday, in all option contracts, we did 36 million. The spiders yesterday, okay, was almost 10 million. The spiders is now over 25% of all the option volume in the whole market comes from spiders. By the way, another million contracts came from SPX yesterday. Almost another million came from, almost 2 million actually came from the QQQ. Everybody trades this. Here's what we're going to do. We're going to go out just over 3 months. I'm going to go all the way to these 115-day expiration. 115 days out. And in my first example, and you can see I've got positions out here. My first example, I would like to tee up the first example by saying here, let's go out here. And I'm actually going to write this up right on the top of the screen. I'm going to go out, okay, and I'm going to sell, ready for this? The 20th of October. And this is going to be a 475 call. And I'm going to sell it, let's say for market's $1.27, $1.29. Let's say I can sell it for $1.28. Is that reasonable? Can I fill $1.28 right now? If I tried to route this, could I fill $1.28? Survey says, well, he tees it up, puts it $1.28, confirm and send. Okay, $1.28. I am the offer right now. I am the offer. Look at that. I did Captain One Lot. Captain One Lot rides again. By the way, I'm a $1.28 offer. I'm next in line. You can see my offer in the New York Stock Exchange. Now, this is actually an option market, but NYSE now has an option market. So if anybody is going to fill, it's me. If you tried to buy that option, I'm first in line. Captain One Lot is tying up the whole market. You can see my order. And again, you'll see my fill, okay, in moments here. Look at this. Market's now 127, 130, and I'm a 128 offer, and they still won't fill me. It's killing them. It's killing them not to fill me. I'll fill here in a second. Anyway, let's assume, okay, that I've gone out. Let's assume that I've gone out now and I've sold this option for $1.28. Everybody comfortable with that? I've sold the option now for $1.28. Okay, now what do I do? I'm going to tell you exactly what I do. Absolutely nothing. Everybody's doing something. Okay. Okay. There, I'm filled. I'm filled at $1.28. Everybody's doing something. I'm doing nothing. So I sold the 475 call for $1.28. Now, close that up. Let's say nothing happened over the next, okay, let's see the next expiration. What's the next expiration? Here's 115 days. Here's 80 days. How many days between 80 and 115? How many days are in between? Quick. Okay. It's 35 days. So you basically have 1 month of time. So I got 1 month in here, just over a month. Okay. Will the option decay rapidly? Because what I'm told is that options further out in time don't do what? What I'm told is options further out in time do not do what? People say they don't decay. Absolutely do decay, but it's not what we term theta decay. It's Ultima. And Ultima, okay, deals with what we term skew. So what actually happens here from 115 days, what I'm going to show you is, here's the 475s. Here's the 475s, okay, right now. Now they're trading almost to $1.30, which is okay. Here's the 475s. What are the 475s going to be worth 80 days, 35 days from now. So to figure that out, I'm going to open up the 80-day expiration. Okay. I'm going to scroll to the 475s. Now, this is assuming that the market stays what? Flat. The market's not going to stay flat. The only thing that I want to reiterate, and the thing that I want you to really pick up and to like get into your head, is there's a phenomenal amount of decay. Phenomenal amount of decay. And we're 115 days out. As I said, does it matter what pony you ride as long as you get there, okay, and get there with less risk? So we're going to go to the 475s, exactly 35 days from now, okay, assuming all factors being held equal. I could turn around, okay, and I could buy the 20th of October option, which is the 475 call. I'd be able to buy that back for approximately, here it is, 47 cents, okay, 47 cents. What am I making? What am I making? Well, the last time I looked, okay, that's way more than 50%. Generally speaking, if it's exactly 30 days, you should be able to make between 50, okay, to 60%. This is even more. Ultima, okay, is what you need to learn. You're like, wait, what are you doing? Okay, I'm riding options that are way out in time and really far out of the money because there's such negligible amounts of risk. Okay, I'm riding them because their skew collapses, snaps, okay, in a window of time that is further out. Okay, and I want to reiterate this to you. Does everybody see what I'm doing? Because I want to, okay, assure you. In fact, I'll take you through a little bit of the calculation over here. I want to assure you that every example that we do, okay, so if I go out there and sell something for $1.28 and I turn around and buy it back 47 cents, okay, I'm making 81 cents. I'm making 81 cents, okay, of the $1.28. I didn't have to wait 3 months. I waited 35 days for that. Question is, could I do this even more rapidly? If I sold the 475s like I did, okay, right there for $1.30 now they're trading $1.30, okay? If I sold those, the 475s for $1.30, and then only waited a few days to buy them back. What's a few days? Let's hold it from 115 to 94. How many days are in between here? Oh, 20. Okay, it's basically 20 days. And again, that includes weekends. This is not trading days. This is full days in here. Look at the 475s. Now they're trading for 70 cents. Okay, I can make almost 50%, almost 50% inside of like 20 days with what? With nominal risk. Do you realize I'm selling the 475s? I'm only at 435. To get to 475, like where does the market have to go? Let me open up a big chart here. 3-year chart. The market has to hit all-time highs for me to even feel threatened. Okay, is it possible? Yes. Is it likely? No. Will I take that much risk? Absolutely not. Okay, and people look at this and they go, huh, that's interesting. Can I do it in other products? Of course you can. Let's go to the Qs. I like to only show you the really liquid products. Here's the Nasdaq. Could I do this in the Nasdaq? Of course I can. If I did the exact same trade in the Nasdaq, are we okay right now? I'm going to pause, time out. Okay, are we okay? Because what you thought was a lot of decay there shouldn't be that much decay out there, but there is. That's why you tune into this webcast, is because you're actually learning that there's edge way out in the future. If I go 115 days out in the QQQ, again, you can see I've got positions in here. If I go 100 and some odd days out in the Qs, let's go over here. This is an option trading for like a $1.20. Okay, I'll try to sell one of the Qs too. Let's go actually try to route this at $1.20. At the $1.20. Okay, so I'm trying to sell this. It's 118, so it's 118, 120 as the market. I'm trying to sell it for 120. But if I were able to sell this 115-day option, if I were able to sell the 115-day option, which is the 415 calls, okay, and I sold those for $1.20 credit, what would they be worth 35 days from now? 35 days from now is exactly the 80-day expiration. Open it up, look at the 415 calls. Look, 415 calls. What are they trading for? Let's call it 70 cents, okay? 60, 70 cents. What are we? Okay, we're gold. or gold. Did I make as much in this one? No, but you're also dealing with right now, the product is the QQQ, which is, okay, unequivocally the most volatile animal pretty much on the screen in terms of index products at present time. It's chaos in here right now, chaos. I cannot stress to you enough, right? You can do this and you can not, again, not tie up tremendous amount of margin. All right, I'm going to pause for a second to make sure that everybody's on the same page. There's questions, right? Like, in the examples, right now is the time to ask because we're going to go a little bit deeper. All I want you to understand, okay, conceptually at this point in time is that, okay, we are going out, okay, we are selling an option way out here, okay, we're out here. For instance, you sell those 120s, right? And you collect, for instance, $1. You're selling out there, and I'm all the way in the nosebleed seats. Like the stock has to move up. This one has to move up 20%, or the index product has to move to all-time high, okay? And what we're doing is that dollar decays very, very quickly. The decay, though, isn't what we term classic theta decay. It's actually Ultima. So the decay rate of the dollar is incredible. And we just basically are saying, like, look, I'm only going to hold the trade for maybe 30 days, but I can make between 50 and 60% on the trade in 30 days. Okay, then what's the name of the game? Okay, if you can go out and you can create a trade, right, where you can gather edge. And again, I always like to use like examples. I'm always looking for something to use for an example. We're going to be in the inventory management business, and this roll of tape, okay, let's say that every time I can go out, I can sell the roll of tape for roughly $1. And then I can go out and I can actually buy this roll of tape in bulk for 50 cents. Would you do it? If you could sell these online for $1, and you could turn around, though, you could be buying them in bulk for 50 cents, okay, with shipping and everything included, right? Would you do it? Would you do it? Okay. Anybody? Would you do it? And what would be then the key to doing it? By the way, these are not rhetorical questions. You could jump in here anytime. I just want to make sure everybody's on the exact same page, understands where I'm going, okay? Of course. So we're going to actually take this a couple of steps further. First of all, people always ask me why we sell further out in time. Right now, the name of the game, everybody that thinks they understand what's going on in markets, okay, they keep jumping on. Like if you read any Reddit board, they're like, you got to do that really short-term 0-day expiration. I'm going to tell you a quick story. You see these weeklies? Everybody see the weeklies? All right. I was at the original presentation, okay, and worked for the individuals that pitched weeklies to the Chicago Board Options Exchange, okay? This was basically the thinkorswim idea. I was there when we actually pitched the idea, and I'm telling you right now, there's no edge in that. You're going to get killed. If you do 0-day expiration stuff, you get killed because there is, first of all, incredibly low amounts of volatility. If you look at volatility, it's like 13%. I'm not selling 13%. People, I'm 115 days out. I'm selling like 17%, okay? I'm huge by huge in here. So I'm huge by huge in terms of the amount of volatility. I am selling this juicy volatility, and the volatility is collapsing and decaying, right? Now, the next question that always inevitably comes up in here, how many people are concerned about margin, okay? How many people, by the way, even out here that could be considered like weeklies, wouldn't make a difference. All I want to do is caution you away from short duration stuff, okay? It's a trap for retail traders. And I'm not saying that for any other reason other than to try to protect you. You are the most important. Like, look, every retail trader that comes through here, we're all retail traders, meaning, we trade for our own accounts and so forth. And some of us actually do manage money. We manage money as well. But in terms of retail traders, I want to get you in, I want to get you out, okay, with the least amount of stress, okay, the least amount of risk, and the highest probability of profitability. And the next question that inevitably comes up is after I show the longer dated options, people go, what about margin? I'm going to get killed on margin. No, you're not. You're not going to get killed on margin. So they came up with a product, okay, and the product is actually called the micros. Let me actually switch accounts over here. This is a $5,000 account that I'm presently in. What are the micros? The micros are a product, okay, that are what we term options on futures contracts. They tie up nominal amounts of margin, And you go, I don't even know what an option on future is. I don't even know what a futures contract is. Trades exactly like the spiders. With all due respect, look, there's even a 115-day expiration. Everybody see it? That's 115 days out, right? Let me make sure I have the right color up here. So that's 115 days out, okay? What's the difference? Let's go in here and let's actually see what's the margin, okay? I want a similar trade to what I did a moment ago. We're gonna come in here, we're gonna go delta, 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 right? I just wanna take a quick glance. I'm gonna build you a trade almost identical to what I built a moment ago inside of what? Inside of the spiders. But now I'm gonna use an option on future. Here's the 4800s, okay, it's 1250. Let me lock that down. Bear with me here for a second. Now this is a $5,000 account. And people say, I can't do it in a small account. This will tie up $600, okay, $59.82, okay? Bear with me here for 1 second. Can you afford that? All right, can you afford that? It's $700 of margin. That's not me. Look, that's the buying power effect. It's right there. Okay. On a $5,000 account, absolutely everybody can do it. On a $2,000 account, you can do it. And that's one contract. By the way, I can do as many as I want in here, right? I can just toggle up. Let's do 3 contracts. Let's get crazy. 3 contracts. He's getting crazy. 3 contracts will tie up about $2,000 in margin. For $2,000 in margin, that's a 3 lot. That's not a small trade. It's not a small trade. It's a 3 lot. Okay. For a nice juicy credit. With that being said, you just circumnavigated margin. That's it. You just have to learn what an option or futures contract is, and we actually we teach that. If you are so inclined to want to learn, right? You never have to worry about margin. Again, you don't have to worry about day trading margin rules either, because there's no day trading rules in this product, none. Right? So again, I am 115 days out, and again, it's a weekly, but it's 115 days out. There's also short duration stuff in here too. Listen, what we're going to do now though, is you got to get a feel for this on a much more broad scale, right? So you've gone out thus far and we've talked about, okay, we've talked about just selling, for example, that one option, okay? So we were just talking about selling right here, and we're selling this 120, right? And sell the 120 call. But what we really need to do is, if you sell a 120 call and collect $1, and then you just, what am I supposed to just wait for a month, and then you make like what, 50 cents on that thing? It's not enough. You're exactly right. That's why we're going to be in the inventory management business. As I said, with this roll of tape, okay, with the roll of tape, I want to go out, and every time I get online, I can sell one of these rolls of tape for $1. And then I can turn around, I can buy one for 50 cents, ship it to you, and boom, I make 50% out the door, right? Then what's the name of the game? Volume. It's about inventory. And I got to go out here and I want to sell, for instance, a 350 put. And then I want to sell, for instance, a 340 put. And I want to sell, for instance, okay, and it goes on and on and on and on. You just want to sell, 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 sell. But what's the risk in here? Okay. You're going to sell, and you're going to sell, and you're going to sell, and you're going to sell. And eventually, okay, 90% probability and the 10% hammer. The one thing we haven't even worried about yet is about risk management. And it's the only way you're going to keep profitability in this business is to mitigate risk. Because what you're going to learn is 90% sounds great. It sounds lovely. It sounds wonderful. But 10% of the time, the market rips your face off, just rips your face off. When I go back to the original example that I did, what did I do? The 475 calls, right? So I went up to these 475 calls, and I sold those 475 calls. And I sold them for what? $1.28. Great. They're trading basically $1.28 right now. And I sold those 475 calls. What's the probability? Come over here to options, theoreticals, and Greeks. Come down here to probability out of the money. Look, they have a 90% probability. It's like I've done this before, right? By the way, these probability calculations, just because there's probability calculations, every trading application should have those. If you have a trading application that doesn't have probabilities, okay, you're wasting your time, because the whole market's based on it, like probability out of the money. Same thing in here. Like, look, there's the probability. I was showing you these 4800s, and they have an 85% probability. Bottom line is 90% sounds great, but 10% of the time, the market rips your face off. And what happens to people here is when you trade high probability strategies and you're wrong, you get hammered. And everybody that's ever sold options, everybody and anybody that's ever sold options goes through this process. You make money the first time and you never question it. And again, listen very carefully and then you're going to respond if you've ever done this. You ready? You went out and you learned a strategy called like an iron condor, and you took a class and you paid $500 for the class. So you go out and you pay $500 for some class to learn a strategy called an iron condor. So there goes your $500, and you go out and you learn to sell an iron. And guess what? The first time you do it, you just dabble, do a one lot in the spiders, and you make a couple of bucks, and you're like, hot damn, and you do it again. And then the very next time you do it, you do a couple more contracts, right? Okay, what do? You increase contract size. And hot damn, I made money 2 months in a row. And the third month, you make money again. And in the fourth month, now you're starting to get confidence. You're like, yeah, you get your stomach, you got the belly for risk now. So you step up and you're no longer trading in the spiders. Now you're doing 10 contracts of iron condors in a product called the SPX, which by the way, we call that the Widowmaker. And you step into the SPX, and the very first month you do it in the SPX and you do 10 contracts. Okay, it's a train wreck, and your losses exceed the gains of the first 3 trades, and you end up losing half your account, and you're like, this is a horrific train wreck. Okay, it was working, and then the wheels came off the bus, and people they listen to that example, and they're like, holy crap, has this guy seen my account before? Okay, and you go, yes, I did for 15 years. I can see everything you did. How many people have ever experienced that? A couple of people are coming in there. Right? Okay. And then you turn around and you think, and they'll never do it again. They'll never do it again. But you keep thinking back. And by the way, I'm going to give you the truth. You keep thinking back. That crap worked for the first 3 months. There's something to it. Okay. I think I can do this. I think I can do this. Then you probably plunk down another $500 to take another class. And the other class teaches you how to fix it. Fix is a really dirty word. Okay. I hate that crap. When people say I can fix trades, it's like a very degenerative term in trading. You're like, I can fix it. I know I can fix this. Okay, you can't fix it, because I'm total cynic on this, because I've watched people just get out a shovel. Like, I've literally out of the blue called people when I was actually working risk at thinkorswim. I've called people and I said, you've got to stop this, okay, or we're going to cut you off. Like, we're not giving you a choice. You're going to stop because you're degenerate at this point. You keep just adding more money, okay, to a really bad trade. Some fixes may work, but the very notion of fixing a trade throws good capital after bad capital. It's like, you got to throw it out like yesterday's trash. Look, if you took a car and you drove it off of a cliff, and then you brought the car to a body shop, right? What would they say to you? They'd be like, oh yeah, that's a nice piece of crap. Okay, that's what they would say to you. And you're like, what do you want me to do with that? And they go, I want you to make this car as good as it when it was new. And they go, I have a better idea. Why don't you just go get a new one? Okay. And look, you got to learn to do this right. You got to actually, okay, learn how to what's termed hedge. One of the things that we're going to talk about now, I'm going to show you the full Monty here, right? One of the things we're going to talk about is, and I am adamant about, in this business, you must use a sacrificial lamb. What's a sacrificial lamb? If you're in the tape business, okay, what do? I sell rolls of tape. Oh, okay, how do you do that? Well, I sell rolls of tape and then I go buy them cheaper. I go, okay, so what's the key? I go, well, the key is volume. If you go out and sell rolls of tape, eventually you're going to have to hire employees. You're going to have to get insurance policies. You're going to have to do all kinds of stuff. There's going to be a cost of doing business, okay? You're going to have to have a little bit of cost of doing business when actually in the tape business. There's also a cost of doing business here. It's not what you think, okay? It's hedges. If you lived, I know this sounds really weird, but I think it's actually a really viable analogy, specifically for where I live. I live on an island right now. It's a 28-mile island. I can't go very far. I'm here about 7 months out of the year, but if there were a volcano on this island, there is about 300 miles away from here, but you could walk up, okay, every month, throw the lamb into the volcano and be like, I've sacrificed the lamb to the volcano. We'll be okay this month. You're going to do the same thing in the option market. Okay, except in the option market, it's not a lamb into a volcano. It's called a hedge. Okay, it's called a hedge. You have to have some risk reduction methodology. Let me explain exactly why. Because if you don't, you will suffer the wrath of markets. Where people go wrong in this business is that they think they actually know something. Let me tell you the truth. The longer you've been in this business, okay, the longer you've been in this business, the more you realize you don't know anything. And you can't actually control, okay, what the market's going to do. All you can do is control what you put on. If you think about this as a retail trader, right? And everybody should say that. I like that. Somebody came in here and says, I know nothing. That's the key. You know nothing, but you can control what you put on. You can do what you want, when you want, how you want, at your price. And everybody's like shocked by that. They're like, wait, what? What do you mean? Well, look, it's utopia out there. I can buy something and sell something basically with a 1 penny market. Look, I get 49 cents at 48 cents, utopia. I made markets. We used to make markets $3 wide, $3 wide in a product called Yahoo back in the 90s, right? Now it's 1 penny wide. It's utopia. And people are like, I'm just getting ripped apart because you don't know what edge is. You got to go out and you got to find edge. And if you look at something like the spiders are currently trading, let's call it 435, because they are basically 435. We're going to open up the 115-day expiration. We're not just going to go out and sell calls. We're also going to look way out of the money. Okay, way out of the money. We're going to sell some puts too. Look at these puts trading for like $2, 360, 365. Calls up there. Okay, 470s, 485. It's gold, Jerry. It's gold. What I want to point out on this particular front, okay, I'm going to show you exactly how this works. We're going to go into a product, okay, and the product is going to be called, the fictitious product is going to be called SPY. It's really not fictitious. And SPY is going to be trading at 435. I don't do like anymore. There's no more fictitious examples. This is real. We're going to go out in this example and we're going to sell a 475 call, and for it, we're going to collect $1 simultaneously. That means at the same time, okay, I'm going to go out here and I'm also going to sell, okay, a 360 put. That one I'm actually going to collect $2 for. The puts you're going to collect a lot more for, okay? Before you know it, this market's going to move. And as the market moves, it's just like this roll of tape. What's the key to making money on tape? Inventory. I need inventory, Brew. The more rolls of tape I can get through, the more money I can make. So we're going to go and the market moves. And before I know it, okay, I'm going to be selling what? Let's make sure we're good here, okay? I'm going to go out there and I'm going to be selling, for instance, the 485 call. If we rally up a little bit, collect $1, then we sell off a little bit. I'll be selling, for instance, okay, 350 puts, collect another $2. And before we know it, maybe I'm even selling 365 puts after a rally and we sell $2 and come over here and sell, for instance, the 470 call, collect another $1. What is that? Okay, what is that? People, that's what I term my inventory. That's my inventory. Just like a roll of tape, I've gone out and I've actually sold a couple of calls, sold a couple of puts. What does inventory look like when you really put it together in a marketplace? Say exactly what it looks like. It looks like something like this, okay? Look at all these. Captain One Lot rides again. And guess what? Most of them are up close to 50%. Ooh, that one's close to a fill. Point I'm trying to make over here is this is not a fictitious example. This is about as real as it gets. So I go out there and I'm splatting inventory on the other side of the markets. And you're looking at this, you're like, this looks very complicated. It's not complicated, okay? You don't do that all in one day. That could take like a month to get set up. And all you do is basically like look at your phone once in a while. You go, oh, Don is selling the 470 calls. I can sell the 470 calls. Sold. Okay, we even give you a price. We give you the date that we traded. We give you the exact moment that I executed in the price and everything. Okay, what's the problem with this picture? What's the problem with this picture? Anybody? Okay, I'm going to tell you exactly what the problem is. Sooner or later, when you least expect it, market's going to wake up. It's just going to wake up and it's going to be like, I gotcha. And the market's going to make a huge move, either higher or lower, and your inventory is going to get annihilated. You're just going to get decimated like that. It's going to snap you in half like a twig. Everyone that sells options goes through this. You make money, make money, make money, make money, make money, get hit by a Mack truck. Okay. Enter the hedges. What people forget about markets is, okay, markets, you have to think of the markets as the beast. It is the entity. It is the all-knowing, all-seeing beast. And what the beast can do, well, there's no telling. Enter the hedges. Okay. Whoops. Oh, that pen keeps changing over there. And in the hedges, what are hedges going to do? That's a G. Hedges, enter the hedges. There are 3 hedges that I typically use. Okay, I use what's called an RTS, which is a risk twist spread. I use a VVS, which is known as a VIX vol spread. And then I use what's termed, okay, a gamma iron. Those are 3 types of hedges. 3 types of hedges. Risk twist, okay, VIX vol, and gamma iron. Let me explain exactly what a hedge is. Okay, is a hedge going to cost me something? It is, but it's a cost of doing business. Like if you went out and you had a business selling rolls of tape, you would need some type of a hedge. You would have to have insurance for your employees. You have to have some type of insurance, right? You know, for workers' compensation. It just goes on and on and on and on. Okay, so I stress to you, and I stress to everybody in here, a hedge is one of the most essential things. Let me explain the easiest hedge to understand, okay, and why it's so essential. Here we go. I'm going to layer in right here a little hedge, and it's going to be called a VIX vol spread. What's a VIX vol spread? It's a trade done in VIX. What's VIX? S&P 500 volatility indicator, right? So in the VIX, it's a tradable product. It's a S&P 500 volatility index, I should say, okay? VIX is a product. Let me ask you something. If the market goes down, and I'm not talking just down listlessly, if the market goes down, I mean really gets punched hard to threaten those 365s, because if you just go into this naked, okay, this is just dead person walking. You're going to have a VIX volatility spread, and we're going to lay a VIX volatility spread perfectly right here. What's the VIX volatility spread going to do? As the market goes down, VIX goes where? Where's the VIX go? Up. But boom, it explodes in value. Okay, anytime the market goes down, where's the VIX going to go? Up. It's going to explode in value. This trade will cost you next to nothing. In fact, we can even do the trade sometimes for a credit. So if the market does crash and burn, oh, the market's coming down, the VIX trade will absolutely erupt, and it provides you an umbrella. And that umbrella will help you, okay, mitigate exposure on any of these positions. All of a sudden, poof, it's like a parachute, okay? The VIX trade explodes in value and mitigates any downside losses on those particular positions. People, I cannot stress to you enough, without a VIX volatility spread, you're at this alone. You must use some type of a hedge. Then somebody says, well, what happens to the upside? The upside, you actually use a trade called a gamma iron. If we rally huge, you have to actually pass through a buy side trade before you can actually get hit on any of the options you've actually sold. It is very straightforward. There is a cost of doing business. The cost of doing business is nominal. You're going to use trades like VIX volatility spreads, okay? And that's all you have to do in order to be able to manage your risk. This is kind of what I call the full Monty. This is like inventory management, because you want to make money every single month. And if you want to be able to make money every month, you got to put little chunks on, splat them out, okay? Splat them out and just keep that ball moving forward. You know, this business is not about, oh, do you think I'm bullish? Do you think I'm bearish? Okay, what do you think the market's going to do? Maybe I should call up Kramer and ask him. Okay, it's insane. Just go out there and sell some premium. You're being afforded the opportunity to sell premium. It's one of the best SKUs in the marketplace. Volatility has picked up a lot. This is good, okay? I mean, it's really good. And I can't stress to you enough, the hedges are absolutely a critical component, all right, to longer term success. Without them, okay, you've got nothing. Look, people, this is why you want to learn to sell premium. You can do this in an incredibly small account. That looks like a lot of stuff going on. It's not. You can go out there and put on 3 pieces of inventory with a $2,000 account, okay? Little hedge here, little hedge there, little tweak here, little tweak there, you're good. Produces incredible positive decay, may enhance existing positions. You can actually use this against existing positions, right? And it's, if you look at this, provides a high probability of success, never need to buy or sell the stock. And you could be wrong on market direction, okay, and still produce profitable trades, okay? You could be wrong on market direction and still produce, okay, profitable trades. Hey, let me make sure we're good here. So with that, I stressed to you in here, and sorry, I'm typing off the side of my screen back to one of you. I stress to you as I actually show you this, okay? Hedges are critical. You're going to need this in your life. And one of the things you're going to need this in your life for is, I'd like to sit here and tell you that I knew which way the direction of the markets are going to go. And I'd like to tell you a story about like, this is going to be an easy market. But look, for the foreseeable future, you sell premium, you're going to manage the risk. It's not that tough. That's what Ultima is. And you can see in this account, there's a TheoTheo portfolio, okay? Here on TastyTrade, and again, on Tasty, I'll open up another portfolio, okay? Here, this is, again, this is not the margin for this one. It's another trade. This right here, okay? All these trades that are in here, there are 1, 2, 3, 4, 5, 6 trades in there, 6 pieces of inventory. I'm not even tying up, okay, but about 2,000. This is for a $5,000 account. Again, the portfolio that you're seeing right here, that MES portfolio, it's a $5,000 account. This is the account that you get to actually follow. That exact portfolio, this is what Ultima alerts are actually based on. $5,000 account. If you have a $10,000 account, you just do 2 contracts for every 1 contract I do. And somebody says, what happens if I have a $50,000 account? Yeah, then you follow the big boys. This is the ES. Okay, I'm only tying up $14,000 of margin right now on my ES position. You can see everything. By the way, everything that we do here at TheoTrade, this is completely no holds barred. You get to see every position I do, opening, closing. Look, I'm telling you, right? You can be wrong on market direction, still produce profitable trades. You need this in your life. Selling premium could potentially bring in consistent returns while minimizing your risk. In a moment, we're going to discuss criteria. But before I do that, I'm actually going to show you, okay, the trade alerts. I'm going to show you what, or I call them live examples in here, but every trade that I'm about to show you, okay, was done live. Variations of all of the following trades can be done with as little as $2,000 in a funded account and can be done inside of retirement accounts, okay? So everything I'm showing you can be done in a retirement account. In fact, one thing I wanted to stress to you, okay, the account that I was showing you, this is a retirement account. Right here, this is an IRA. And you go, how do we know it's an IRA? Okay, when I come in here, if I were to buy or sell an option position, when I click review and send, you can see it says SEP. Okay, it's an IRA, the SEP IRA. So there's no holds barred in here. We show you everything, right? Buying power, all of it is actually distinguished in here. Look, what I'm going to show you is these are trade alerts. The first one I'm showing you is like Tesla. And the only reason I'm showing you Tesla, okay, I think it's a little easier to understand with an equity product initially. I'm going to go out. This is the opening trade, the closing trade, and I'm going to show you 18, okay, months of results. So we started tracking this in early 2021. This is January of 2021. We have results all the way until present day. Okay, I'm showing you 18 months because that's when we got tired of cutting and pasting in the slides. All of the other results are on the TheoTrade website. Like you can actually see everything from 2021 on, okay? And we can see every single trade. What you're looking at though, in this particular case, all right? You can see the opening trade, the closing trade, okay? The exact, what I sold, okay? It's a call, the price I sold it, the price I bought it back, and the return. Okay. Ooh, I think I just filled a put profitably for a 50% gain. What did I just fill? Okay. Oh, no, I sold another call. I know I have a put resting in here. Okay. Ooh, I'm 50 cents off the mark. Okay. I am 50 cents off the mark for another fill. So apologize. I'm trading off the side of my desk here as I'm doing this. So this is the opening trade, the closing trade. Again, you can see to open, to close, and the return. Here we go, 18 months of returns. I'm going to go through this rather quickly. So this is Ultima. This is the trade alerts that we actually send out. These are trades that have not, like, we're not just, hey, you could do this trade. These are live executions, okay? What you're seeing right here, that's copy and pasted. That one happens to be copy and pasted specifically from right here. When I say right here, this is thinkorswim. If I were to come in here, if you wanted to see a lot of the trades, this is the ES, okay? This is everything I've done in the last 30 days. As I said, no holds barred. That's the last 360 days, okay? So in 360 days, I've done 102 fills. So this is basically everything that's been texted out. And what gets confusing, it's like to open to close, to open to close, to open to close. So I took this and I pasted it directly into here, which is, again, my PowerPoint. 58% return, bonds. Okay, I do trade some bonds. 57% return, 53% return. IWM short call, 62%. 53%, 76%, 60%, 50%, 51%, 57%. What am I doing? The exact same thing in every single trade. Okay. Over here, the SPY short call, 49% return. Okay, 50% return, 62% return. The QQQ, 53%. Another QQQ, 50%. Another QQQ, 50%. Another QQQ, 64%. By the way, some are calls, some are puts. Here's another call, 53%. Here's another call, 57%. Here's another call, 56%. Here's another call. Okay, 50%, 54%, 19% loss. I'm a loser. Okay, look, crap happens, right? But it's high probability stuff. 54%, 52%, IWM short put 49%. Okay, now we're selling a lot of puts. Apparently, it just means the market's moving up or the market's moving down, and I'm just ebbing and flowing with the market. 49%, 51%, 50%, 54%. Okay, 51%. Now, as you start to get a little bit more ramped up, and we're still in 2021. Okay, I get a little bit more astute with the types of trades that I'm doing, meaning that I'll start to move from like IWM or QQQs and spiders and bonds. Okay, and I'll start to actually push towards, for instance, bigger products. Bigger products, which you'll see in a moment, is stuff like ES. I'm still scrolling through over here. As you guys can see, every single trade that this portfolio has had, even stuff in Amazon once in a while, and QQQ and more QQQ and more QQQ and SPY. Okay, and more SPY short puts, and then here's the ES. So why did I start trading the ES? Because the ES, one contract in the ES is the equivalency of 5 contracts in SPY. So a one lot in here, Captain one lot rides again. A one lot in here, it's a much bigger trade. 50% return, another 50%, another 50%, 51%, Qs 51%, ES 51%. Now, once you get a little bit more ramped up in here, then I start actually taking you into more depth. Okay, there are trades like Christmas tree spreads, which you'll see here in a moment. So I'm still going through and toggling through some of the returns. We're still, again, now we're in August of 2021. Okay, here we go. This is actually a Christmas tree spread. What is it? It's a ratio spread. Got a hedge actually built into it. Sold this for a $21 credit, bought it back for a $3 debit. It's an 85% return. Okay, we're still here. Okay, in basically 2021, just selling some premium. And this was a rip and rally in 2021. Doesn't make a difference. Okay, just does not make a difference. Here's another Christmas tree spread. This one I sold for a $22 credit for a 92% return. Okay, 52%, 52%. So just scrolling through now, I'm in 2022. Okay, 2022, we're still rocking right along here. This was actually one of the biggest Christmas tree spreads I ever did. I put it on for a $13 credit, was able to produce almost $4,000 of profit on every one unit, which is huge. On the ES short call, 53% return, 50% return, 55% return, 50% return. Okay, ES 50%, 57% return, 55% return, 53% return. Okay, now we're actually turning the corner all the way into like, April, okay, and March of 2000. This is again April of 2022. It's last year, just over a year ago, 62%, 50%. Okay, I know it's getting like mind-numbing how many trades we've actually gone through. Okay, look, that's where I actually ended. It was 18 months of live trades. And there you go. Well, what happened to the rest of it? Well, what happened to the rest of it is then you get to actually look at the portfolio itself. This, okay, is TheoTrade. This is actually inside of the TheoTrade site. Okay, this is our member portal. And you go in here and you can see every open trade to open, to open, to open, to open, to open. Okay, and you can see all the closed trades to close, to close, to close, to close. You get to see everything. It's no holds barred. Every hedge, it's all in. Like literally every single trade is in here. So when you look at this, okay, and you're like, oh, something expired. Yeah, that's not a bad thing. That was my hedge. That was the sacrificial lamb. It landed right in the volcano. Okay, it expired. Yay! Right? It's cost of doing business. It is. It's the cost of doing business. You can't function in this business without a hedge. You get to see everything that we do opening and closing. Okay, and I say this is TheoTrade. We also have a live chat room. And in the live chat room, let's see if I can actually refresh. Okay, should be live and should be good to go right now. Okay, inside the live chat room, you can see us actually executing live trades. So everybody's in here, realize the goals of the upside action. This is actually one of our instructors talking about specific trades in here. So you get to see everything that we do. We answer questions in real time, okay? And we're actually producing trades throughout the course of any given day, any given week. But this is Ultima. This is very hands off, and it's critical that people take the time to learn this. Look, it's not a huge amount of time commitment. Okay, we provide real-time trade alerts. Every trade that I showed you today in that aforementioned, going through 18 months was displayed live at TheoTrade. Trade results were showing a perfect for part-timers. Okay, selling premium is hands-off, and you can actually even use set and forget order types. You can actually use a GTC, which is what we term good till canceled order. So even a fraction of your time is enough to see real results. One of the things I stressed to you that we changed dramatically here at TheoTrade. Some people have been, around and have seen TheoTrade presentations in the past. Again, we've been up and running here at TheoTrade. A bunch of us left thinkorswim TD Ameritrade. We built TheoTrade, okay? And we've been here since 2016. If you've seen TheoTrade in the past, we did a tremendous amount of education. We still do all that education. And now real-time alerts. Okay, we realize the volatility of the marketplace. We realize the complexity of a Fed raising rates. We realize geopolitical risks. People, you got to understand, okay, what better time? Maybe you don't have time right now to learn a new skill set, but now we're given real-time trade alerts. It's the biggest differentiating factor, okay, that we are doing here at TheoTrade. Selling premium is also a wonderful hedge for recessionary times. I know as messed up as this sounds, okay, the deeper and more cutting the recession is, the better the premium sell. And it's messed up to say that because, look, it has to do with skew. The heavier the recession, the more flex you're going to get inside of the option markets. Markets, they could be in bouts of volatility for years to come. I'm not saying that to scare you. I'm saying the reality is Fed's not backing down rates, okay, unless the economy absolutely crumbled. Okay, I mean, literally the economy would have to crumble for the Fed to actually reverse rates. And as long as rates are above 3.5%, 4%, that volatility is going to resonate. It's going to continue to rebound. It's going to continue to come back. It's going to be this house of horrors where all of a sudden you're like, oh no, inflation is coming back. Oh no, the rates are actually increasing. And then we're actually going to go to period. Oh, it's a recession. Maybe they're going to back off rates. Oh no, inflation's coming back. It's going to be, again, the merry-go-round of risks. Okay, what our members are saying. If you're serious about trading, if you're serious about trading, TheoTrade is by far the best resource out there. If you cannot make dollars, okay, you're not paying attention. They even have a hands-off approach to trading as well if you don't really want to learn to trade on your own. That's what we've changed here. By the way, that one came in fairly, frequent, again, recommendations and so forth on here. This actually comes from Trustpilot. It was June 13th, 2023. Look, some of the characteristics, okay? Attributes of selling high probability premium are undeniable. You never have to buy or sell the stock. Risk is like literally tailored to precisely your comfort level. That's one of the important things. You're never going to use a stop order in here. You can vary time frames, minimize risk. Probability of profitability is high. Most of the time, you're just going to put strategies on. You're not going to use the hedges. So why are the hedges there? Just in case you need them. It's an excellent tool for those seeking returns to build an account. It doesn't matter here if you have a $2,000 account or a $5 million account and everything in between. New products, okay, allow for the sale of options in nearly any account size. And I took you through that today because it's imperative that you understand that. Look, building a portfolio of options. If you're brand new to this, do not let the options portion of this intimidate you, okay? Let the alerts do the work for you. You can watch a video, spend 3 hours, understand the basics of it. Like, I really think that you should understand some of the nuts and bolts. It'll take you like 3 hours, but then selling premium can initially be done for very minimal credits and very minimal risk as you actually walk into it. And the more comfortable you are, the more you're going to get out of the alerts. Maybe you have, I don't know, limited options experience. Okay, know nothing about options. Again, do not let that portion of it intimidate you. Options are the quickest, the fastest, the safest, the easiest way to get where you want to go in the stock market, right? But if you don't know how to use them correctly, right, you can hurt yourself. That's why we're sending alerts now, okay? That's why we're going out there. We can show you how and when to do this, but more importantly now, we're going to send you alerts. You got to be prepared, not scared, okay, of the forthcoming volatility. Obviously, last year was a tough year, but with all due respect, 2021 was wild to the upside. 2022 was wild to the downside. 2023 started with wild to the upside. Maybe we get some up before the down. Okay. Look, the volatility is just here to stay. Kicked off at the onset of COVID, hasn't really resolved itself. As long as the Fed keeps actually hitting the accelerator, it's going to be a rough ride. This is what you're going to need to know to successfully sell Ultima Premium. Look, I'm just going to take you through some criteria for those of you that are very experienced. What really makes these trades work, okay, is what we term criteria. When I talk about criteria, we can talk about selling Ultima Premium and managing the risk and so forth, but what really makes money, what really makes all the alerts and everything work, what underlying stocks or indices make the best candidates? You saw ES, spiders, QQQ, right? That's easy. What volatility should I seek out? Too much volatility, you're dead. Too little volatility, you're dead. What options expiration do I select? Have you guys seen option chains lately? Seriously, these are all the positions, by the way. I love to show this stuff because I always feel like I watch other people's presentations. Nobody actually goes in the account and says, hey, look, this is every trade I've done over the last 360 days to open, to open, to open, to close, to close, to close. Okay. It may not mean very much, but look, to me, it's like, it's everything. It's no holds barred. Like if I make money, if I lose money, you get to see everything. Okay. And that's what's so critical about TheoTrade. Anyway, you come in here. What options expiration do you select? Look how many different expirations there are. 0, 1, 2, 3, 4. Okay. I mean, it's ridiculous how many expirations. We actually got to fine tune this and knock right into the perfect expiration. What's the delta of the option I sell? You're like, what? What is delta? Okay. Don't worry about it. We got it. It's the probability. What options do I buy against my position? That's the hedge. How many VIX volatility spreads? I talked about VIX. How many VIX volatility spreads do I need for what I'm doing right now? Like, is that even the right hedge for today? Okay. How do I build the position? How do I build the position is literally when I was like, how many of these do I sell? How many of these do I sell? How much hedges do I need? Like all of that. It's very straightforward. Okay. But you have to have answers. Do I need a large amount of capital in my account to do this? Absolutely not. What's the right amount of risk for me? We can dial that in. We can actually help you say like, look, I have a $5,000 account. Okay. I need to mitigate my exposure to X amount. What are the percentage returns supposed to be? Okay. We'll actually dial that in 50%, but okay, there's some differentiation. How do I protect myself from market crashes? Okay. Let me show you exactly what we do here at TheoTrade. TheoTrade, okay, creates recipes in trading, right? And now real-time trade alerts when real-time opportunities arise. If I am to trade, like right now, and I'm showing you, if I am to trade, I am presently working an order, okay? I am working an order right here on my screen. What's the order that I'm working? All right, I'm actually working two different orders. One of them is in Netflix, the other one is critical. This, okay, this order that I am working right here is for the TheoTheo portfolio. I'm trying to buy back a put. It's marking is the mid price at $9.50. I'm $9 bid. I'm 50 cents away from filling. And if I fill, okay, I make a 50% return. How long have I been waiting for that? Not long at all. This thing's actually been open just about 30 days. In fact, okay, I want to see exactly how long it's been open. Can't make this one up. Look, you can see it says 47% right there. I opened the trade on June 6th. June 6th. Today's the 27th. Okay. And the trade's about to make how much? 50%. No if, and, or, but about it. And I've got another call on here that's up 17%. And yesterday I closed a call for a 50%. How do I know yesterday I closed a call for a 50% return? There's the call I closed yesterday. It's 4,900 call. I closed it for what? 460. Looks like I opened that on the 13th, okay, for 925. No holds barred, people. You get to see every trade that we do, okay? Every single trade that we do. Look, trading's about answering the what ifs. What might be a good stock or ETF? What's the correct options expiration? How many options do I sell? The capital requirement to generating premium. What options do I buy? How can I limit my risk? We have the answers, okay? What we do here at TheoTrade is we build recipes with very definitive criteria. They're checklists. And those checklists are for every variable in the trade. What if the market goes up? What if the market goes down? The way that these checklists are designed, if you were a pilot and you hopped into the cockpit of a 737, okay? No one hops into the cockpit, turns a key and just goes, throttle up, let's go, sit down. It's not like getting into the Jeep or whatever and putting the car into drive. They have very detailed checklists. That is what the criteria basically is. It's variables. I look like, well, whatever the volatility, what's the right product, what's the skew like, okay? We go through this entire sand sifter of criteria to come out with the absolute pivotal trade, and then we execute it. And when I execute it, then it immediately shows up on your mobile device, okay? And you go, how can we do that? Well, a couple of different ways. Number one, we send it out via text message. But somebody was like, well, I'm not in the United States. What can I do then, right? We have a mobile app. Whoop, we have a mobile app for that. Okay. So TheoTrade mobile, and it actually gets push notification. You can be anywhere in the world. Okay. Welcome. Okay. To Ultima alerts. Ultima alerts are real time. You can have a big portfolio, a small portfolio. And throughout the course of this, okay, TheoTrade is the answer to the question. Well, to give it the right probability for the trade, we'll give you how many contracts do you trade for your account size? When do you close the premium sell? What if we sell off big? Do I bail out of the trade? What if we rally massively? Can I fix a losing position? We give you the how, the when, the why, at what price. And I'm telling you, it's just the beginning, literally just the beginning of the variables, okay, that you are going to face while selling Ultima options for a living. Look, you can read about what selling Ultima premium is. Like, you can read about selling options. You can Google it right now. 10,000 pages will show up, literally in Google, 10,000 pages. Maybe even know how to build a few trades, okay? But that's not what this is about. This is about, okay, you need TheoTrade's alerts. You need the criteria. It's 20 plus years of trading experience. That's just me. By the way, okay, as of like this week, it's now 25 years. And literally, I'm 25 years in the business now. Started trading in 1998. I had access to client order flow for 15 years. Okay, but TheoTrade's not a one-trick pony. We have 7 other full-time instructors over here. We have viewed and studied millions of trading accounts. Okay, ran education for 15 years at both thinkorswim and TD Ameritrade. And at the time, we had the largest option order flow in the entire industry. Okay, that's where these alerts come from. That's where the criteria comes from. Okay. Ultima Trade Alerts is your recipe for success. The following strategy and the corresponding criteria requires the utmost attention to detail. We literally spent years fine-tuning the criteria, fine-tuning the setup, okay? And now real-time alerts, okay, are available on the convenience of your mobile device, okay? Welcome to the Ultima Income Generator Alerts. What you're looking at over here, okay, alerts. This is brand new. We'll give you alerts for 3 months. It's $297. However, it still includes everything else that we do at TheoTrade. Before anybody gets carried away, okay, and they look at this like, oh, it's another $297 thing. Hang with me for a moment, because it's not, okay? I want to explain exactly this. The Ultima Income Generator Alerts. I am the trader for these 2 portfolios. You will gain access to the Theo Small. Theo Small, okay? You can do this with $2,000. I always say it's $5,000 portfolio. I like to make that the minimum because it's a $5,000 portfolio if you want to do it in an IRA. In an IRA, it's $5,000. In a regular marginable account, it's $2,000, right? Then we have the TheoTheo, what I call the big boy portfolio. That's a $50,000 plus portfolio. You get access to both portfolios. Somebody says, well, I have $15,000 in my account. Yeah, you follow this one, you just do 3 times as many. Whatever I do, you do times 3. Okay, and we explain that. Look, for this, you receive text and push notification. The trade alerts are for 3 months. We presently have just shy of 6,000 people here on TheoTrade. There's 6,000 people here on TheoTrade receiving different alerts. Now, people trade different stuff, different times. Okay, when I talk about different alerts, I just want to show you. Okay, how many people follow this? For instance, these are the 4,700 calls. Let's go look, okay, at something we have on. Like, look, as I said, these are 80 days. These are the 4,700 calls. If I go to 80 days, right, and I open up the 4,700 calls, you see where I have positions? Now, go over there and look at open interest. Notice anything unusual? That's where actually the heaviest open interest is, okay? We're the largest out there by far in terms of alert services. Nothing even comes close to what we're doing here at TheoTrade. Okay. TheoTrade is so big that we have to be careful about which markets we trade in because we're big enough now. No one can move the spiders. No one can move the S&Ps. We're so big that we have to trade, okay, in a handful of products. Everything that I trade goes out instantaneously in alert. Look, and you go, well, there's 6,000 clients. Yeah, not all 6,000 though follow the small. This is the small portfolio. A lot of our clients following the big portfolio, but I want you to rest easy and know, okay, when I execute, there's another 1,000 people behind me. Okay, that's what this is about. If I open up any one of these, okay, look how big the order flow happens to be in here. Anything that we trade, okay, people trade with us. And it's just critical to understand anything we trade, people trade with us. Okay, that's what these Ultima alerts are. It's $297 for 3 months. And before I go any further, okay, I'm going to explain a little bit about TheoTrade, about the alerts, but time out. Okay, you can go to theotrade.com/SKU. You can enroll for it. And I throw the page up there. And again, I'm going to throw it up here right now. Okay, one of the most important things, and I'll explain it again in a moment. Okay, there are 30 riskless spots. Effectively, you can sign up for this for 90 days. Okay, you pay $297. Okay, at any point between now and the end of 90 days, you can cancel and get the full $297 back. We don't prorate it. We don't do any of that. Okay, the one thing I implore you to understand: we want people that want to be here. Period. We want people here at TheoTrade that want to be here. And we don't ever want to take a dime from anybody that doesn't want to be fully involved at TheoTrade. So there's absolutely no risk. You sign up today for 3 months, you still get access to everything else at TheoTrade, which I'll go through a bit of it here in a moment. But the most important thing is you get access to the portfolios. You get text and push notifications, you get trade alerts for 3 months. And then somebody goes, whoa, 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 stop. What happens after 3 months? I have an answer for that. After the 3 months is up, you go, what happens after 3 months? You can decide. You can do it again for $297. Like, look, this is not a membership. We do not auto renew. We do not auto bill. It's $297. Okay. After 3 months, if you don't want to do it anymore, it's fine. That's it. They just, we'll just part ways. It's fine. Okay. But the one reason we actually have 6,000 members, we don't force you into any like a gym membership. We don't do any of that. All right. We want people, again, that want to be here. And I'll describe this once again. By the way, it's theotrade.com/SKU. So I want to pop that up here. That's theotrade.com/SKU. It's S as in Sam, K as in kick, E as in echo, W, theotrade.com/SKU. When you go into there, okay, into the site, click over here to add to cart. Okay. When you click add to cart, I'm bringing this up and then I'm going to talk about, there's a full 100% money back guarantee. In the payment info, you can do one payment of $297, 2 payments of $149, or 3 payments of $100. We don't care. I'm just throwing that up there. The other thing I put up here, put your phone number in. When you put your phone number in there, that immediately enrolls you for text messaging. Okay, so that enrolls you for text messaging. Anyway, here's what's actually in Ultima Income Generator Alerts. It's a positive data portfolio. No holds barred trading approach. You get to see everything we do. It's full disclosure, all opening trades, all closing trades, all hedging trades. You get to see everything. I am not only the instructor for the classes, we built classes for this, but I'm the trader for the portfolio. Okay. So I sit here like there's no one else that's executing Ultima. I execute Ultima. We have traders, okay, that work with us. We have traders I've worked with for, 20 years. I execute Ultima. Why? Because it's what I trade. It's what I trade. So it's, no skin off my back. I just execute and literally fire it into a little chat thing and it immediately texts you out. That's it. Okay. So you get to watch me discuss positions like never before. We also do weekly video updates. Okay. Weekly video updates. And we now have the TheoTheta small portfolio. So you get access, okay, to all of it. So I say all of it. This is the TheoTheta portfolio. This is the bigger portfolio. We also, okay, have the TheoTheta small portfolio. That's for accounts $5, $10, $15, $20,000. That's fine. Okay. Now I wanted to put this up here specifically. I've already talked about it, but TheoTrade is completely riskless trade. Like we try to make it as easy as possible for people. Look, the one thing is you want to be comfortable with whatever you do, right? We want you to be comfortable with what we do. Like even if you just watched some of the trades for the first couple of weeks before you actually fully engage, it's fine. It's a riskless trade. There's a 90-day money-back guarantee. And the money-back guarantee, I make it very clear. If you're not satisfied, you don't call us. You don't have to certify like a letter in the mail. You don't have to give us blood like to get out of a gym membership. Just email support@theotrade.com, receive a full refund. I want to make this very clear. There's no if, and, or but about it. There are no stipulations. And the reason we do that, okay, there's money back guarantee. No stipulations. There are none, because that crap is just, who cares? It's 297 bucks. Like, if you don't like this, okay, I would never. We have 6,000 people here, okay, for $297. You know, people go, how do you guys do that? Because we have 6,000 people here. And we have actually a pretty good sized staff now at TheoTrade, but there's 6,000 people here. So we're able to put on some volume, some trades and so forth, okay? Look, if I didn't do this here at TheoTrade, I would still sit in front of my computer and yell at it every single day and still do the same trades. I figure, we might as well actually open up. Meanwhile, I don't report into an office every day. This is my office. Where's my office? Okay, it's in a small office, okay, above the house here in the Virgin Islands with a view of the beach. It does not suck, okay? Look, in the money back guarantee, there's no excuses, no questions, no commentary. You don't have to tell us, just email us and say money back, 90-day guarantee, whatever, and you get your $297 back. Like, I just want to make sure that everybody understands we really do want people that want to be here. Everything I talked about goes to your mobile devices. You know, you can trade off of a computer. I trade on my computer, but I am hardcore into mobile devices. iPhone, Android, any Android tablets, the iPads, it's fine. Any mobile device, okay? Again, your phone is absolutely perfect to be able to trade from. Obviously, you've seen the portfolio. Everybody wants to know this. In 2022, the Ultima portfolio returns on a $50,000 account were 56%. Can I say something for a second? Okay, that's a big number, and I'll tell you why it's a big number. Last year was rocking in terms of volatility. Okay, I always want to shoot for like right around 20% return. 56% is exemplary. There's just no question. That is what I returned last year on a $50,000 account. I made $28,314.75. Okay, I never had more than about $17,000 tied up in margin. Okay, that's the bigger of the portfolios. Here's the weekly Ultima alerts. There's an update video. Every Friday, okay, morning, I film a 12-minute video that updates you with every single move that we make. So if you can't see what we're doing all week and you're like, what is he doing? Why is he doing this? On every Friday, okay, you get this little video. It says, this is why I did this. This is why I did this. And they're updated again every Friday. I shoot a 12-minute video. This is what alerts look like. Okay, this is all the way back like May 30th, but figured you guys will appreciate it. This is actually TheoTheo small portfolio, and the Theo small portfolio buy, okay, the 33.25 puts, August 18th, okay, 10.75 debit, closing for a 50% profit. Here's another one, okay, sell this. This is for a $10 credit. Yet another one, again, June 6th, fairly recent here, 33.75 put, SEP, 1050 credit, closing for 50%, okay. Theo Ultima, sell 3,600 put, okay, for a $17 credit. By the way, this is one that I'm really close. If you want to see those 3,600 puts, okay, where are the 3,600 puts? There they are right there. Check it out. They're up 42%. I'm showing you. That was the opening order, okay? Opening orders for a $17 credit. You can see this is completely no holds barred. You can see exactly what I'm doing. And when I can buy this thing back for just about $1 less, I'll be out. And I'll be out for a 50% gain. Okay, what our members are saying, consistent, valuable education with remarkable return on investment. So quite, satisfied and actually enthusiastic about programs. Okay, again, everything in here, no holds barred. Paul M. The education is second to none. If you're a novice when it comes to markets and trading material is superb, professional, organized, written in plain English. Professionals at TheoTrade have all of the content you can get, whatever level you want to take your trading, investing education skill to. Been a member for 3 years, and I'm still growing and learning, really enjoying the experience. Okay, this one comes from Jeffrey. I want to thank you for all the different staff point of views in trading. This year, I did more of what works and less of what didn't. Thanks to your selling premium, okay, and this is called inflection point hedges. I took $12,000 to over $32,000 in 18 months. Okay. I've been doing your method. Thanks again so much, and look forward to your new ideas in the coming year. Look, get into TheoTrade now. We're going to work with you. There are today, all right, based on the number of people are on, we had a lot more people show up today. We've opened this up, okay, to 30 riskless spots. This is the point where I do tell you, okay, we create 30 riskless spots. That is, okay, on the money back guarantee. On the money back guarantee, we actually have 30 spots open, and we do this to incentivize you literally to enroll today. We put in 30 riskless spots. We actually bumped it up because we have a lot of people are enrolling right now. As you actually enroll for it, again, I want to reiterate, it's TheoTrade.com/SKU. I'm going to answer some questions. Okay, I'm going to answer a couple of generalized questions in here, and then answer some specific questions. But the one aspect, TheoTrade.com/SKU, you still get access to everything else that we do here at TheoTrade. Okay. First of all, as I said, it's unlimited email mentoring. The first 30 people to enroll here today get a 90-day money back guarantee. I will read off a couple of names as they come in. Excuse me, I'm losing my voice here. As they come in, to assure you that you have enrolled and that we actually see your name. One thing that's really critical in here, and I just want to make a quick mention of it, it takes me about 5 minutes. By the way, I can see on my mobile device as you guys are enrolling, it takes about 5 minutes before I can actually see your name, okay, appear in here. So don't panic if I don't read off your name right away. I'm reading off names of those that have enrolled now for TheoTrade, okay? Just to confirm that we actually see you in here, that you've enrolled, okay? And I can see the first batch of names in here, and I apologize, I cannot pronounce the first one, but I'll get back to you on that front here in just a moment. There are 30 riskless spots for the first 30 people to actually enroll today. And again, you are provided unlimited email mentoring. That's one thing I hadn't mentioned before. That is, you can come in here, okay? You can come in here and email us about any of the trades, anything that we do. Now, as I said, get ready for text messaging. You'll see text messages come from us. If you go to TheoTrade.com/SKU, you can enroll. As I said, I'm going to read off a couple of names here momentarily. First couple of names are piling in over here. So let me see if I butcher this one too badly. I'm going to say Raj S from Texas. Okay. I apologize. I'm not going to get that name correct. Ryan B from Canada. If you're Canadian, all right, we work with a specific broker dealer up there. At least we suggest a specific broker dealer over there. Rick S from Washington, Augustine G from Florida, Jim P from Arizona. I'm just reading off, that's the first 5 names. As I said, it takes me about 4 or 5 minutes before I see your name populate in my app. To continue on over here, Judd said, I've been a subscriber, okay, for about 4 years. This is the only organization, okay, that's actually taught me how to consistently make money in the markets, okay? Let me answer a couple of questions as you guys are enrolling, some generalized questions. Before I get into the specifics of the questions, one thing I want to mention, everything, okay, that has always been TheoTrade, you have access to, okay? Yes, you're here to receive Ultima alerts. We also have a chat room. It broadcasts for 6 hours a day, okay? 6 hours a day, you can actually stream, okay? And it's like, when I say stream, all right, it's like real time. We're actually right now, we're in the seam. So make sure that we're good to go over there. So we're in the seam right now, right in between instructors. We have like he's 2 minutes before actually Tony Rago is on, okay? You also receive, by the way, I wanted to make sure everybody sees this. You receive access, okay, not only to the portfolios, but you also receive access to all the classes that we've ever done here at TheoTrade. TheoTrade started, okay, in 2016, and literally up until 2021, okay, was predominantly classes, archives. To give you an idea, you get to see every one of these classes, okay, is for you. Inflection point, catapult trading, income accelerator, Ultima income generator, Z spreads class, gamma irons. These are just a handful, okay, of the archives. Like, I just want you to see, this is the options archive. If you're brand new to this and you're like, oh, this seems overwhelming, we have an entire start here menu, okay? Options 101, options 201. Here's the bottom line, okay? Every genre of trade Okay, everything from day trading to futures trading, okay, to structured options trading, you name it. You literally name it, okay? And we will provide it to you here at TheoTrade. We have all of it, literally all of it inside of the site, right? I mean, it's all in here, all the different portfolios we offer, the archives. Just to give you a further idea in terms of archives, I just showed you a little bit like the option archives. Maybe you are into technical analysis. Our technical analysis group is second to none. Look at how many classes we have, okay? Just in technical, C2 trading system, okay? Tools, spot explosive moves, market profile, okay? Linear regression. It's just people, it goes on and on and on of how much, okay, we actually offer in here. It's all part of the $297. If you're curious why we have 6,000 people, okay, there's no other site that even comes close. You could legitimately spend, okay, $30,000 on a stock market education. It would pale in comparison, okay, to what we're doing here. Ah, here comes Tony live. So Tony's actually coming in here right now live. This is a guy that actually is a day trader. He just trades in front of you live all day long, okay? All day long. He'll actually be calling out different setups throughout the course of his time on there. Look, let me answer some general questions, then some specifics. Again, as you guys are enrolling, all right, I want to make sure everybody sees that because there's a few questions popping in over here, okay? To enroll, you go to theotrade.com/SKU. It's S as in Sam, K as in kick, E as in echo, W, theotrade.com/SKU. And as you come down here, you click add to cart. Okay. David said, when will I see confirmation of enrollment? See if I actually see you in here. Okay. Should see confirmation in the next literally few moments over here. I don't see you in there yet, but you will be there in a moment. Okay. Confirmation of enrollment should take no more than like 5 minutes in here. Okay. And again, I'm just, I'm watching this in here. Let me get through some questions. All right. So remember, as you're enrolling, put your phone number in here. As you put your phone number in there, to automatically enrolls you for text messaging. Don't worry about a tremendous number of texts, not a huge amount of text messages. Okay, it's just enough. It's just enough. And again, you can select whether you want to do 297 or break it into multiple payments. That's completely up to you. Okay, you can even do $100 due today. That's again, it's completely up to you, and it's still okay. It still actually gets you in for the money back guarantee over there. All right, with that, what do you need to get started? Laptop. I mean, really now, these days, okay, you can use any mobile device, okay, iPad. It's completely kind of par for the course. Look, we have everything you're going to need from absolute novice to the most extreme trader. The next thing, this is not a membership, okay? We're not going to auto renew or auto bill you again. We're going to provide you TheoTheo weekly updates. You can see all the moves we make. We're going to provide you access to TheoTrade mobile. And we have a mobile application. On the mobile application, it's everything you're going to need to access for TheoTrade. You can see all of our archives, okay? You can see push notifications, it's all in there, okay? So we're giving you access to TheoTrade mobile, whether you're Android, whether you're iOS, okay? Add your cell phone number when enrolling, receive text alerts. You can email us anytime. Anytime you can email us, and you can ask us trade-related questions. We'll get back to you within 24 hours. I put that out there as 24 hours. Most emails we respond to within about an hour. Okay, variations of all the trades we do can be done on a retirement account, right? That's fine. Retirement account with as little as $2,000, okay, in a standard margin account. We at TheoTrade can help you get approved for options trading at several major broker dealers, right? And remember, there are now 30 riskless spots, okay? 30 riskless spots are available. Look, get results, take action, enroll for TheoTrade now. There's no risk to you in enrolling. So I want to make sure that everybody's kind of comfortable because I do want to kind of wrap up. I've gone way over here in time. Again, it's theotrade.com/SKU. Again, theotrade.com/SKU. You can also come to the very bottom of this page, okay? The auto expected move indicator for thinkorswim is on that page. Those of you that are enrolling, if you are enrolling, right, you need not actually download that indicator. You get every indicator that we built here at TheoTrade Again, it's TheoTrade.com/SKU. Any further questions in there, we will answer them in the chat. Okay, I read off just a handful of names that were actually in here. I'm sure that many more names are actually populating in, but I've gone way over in time. I want to make sure that everybody's comfortable. Okay, I think it's so Mark E. Okay, Mark E. I see you in here. Rove K. I see you in here. George T. I see you in here. Cameron Q, I see you in here. I'm just reading off a couple more names. So did I get Jim? I think I already got Jim P. I did. Fantastic. So I just read off 5 more names. We're good. We still have, again, a couple of open slots for the 30 riskless spots left. By all means, I'll leave the webinar open. I'll be able to kind of type to you back and forth if you guys have any further questions. I want to thank everybody for tuning in today. Again, all right. By the way, somebody said, are there other trade alerts besides Ultima? There are definitely, like we do in-out spreads and so forth. We make calls all day long live in the chat room, all day long. For those of you that want to sit there, like intraday, we're in, we're out on the same thing. We make calls all day long. So by all means, it's Ultima though, that is like the most pivotal. It's the core of what we're actually doing right now, and we have been doing since 2021. Thanks everybody for tuning in. Fantastic. If you guys have any more questions, we'll leave the chat room open right now to answer a few of those. Have a wonderful afternoon, everybody. Bye-bye.